So people often ask me, what is the real value of having a financial advisor? And to me, there's a couple different layers that warrant the fee that we charge for our clients. The first most valuable piece, in my opinion, is really just behavioral coaching. So having an independent third party in your corner to analyze data and draw conclusions from historical occurrences and give you advice when things are looking gray is really valuable before you make rash decisions. So during the pandemic, just in March of 2020, $330 billion were sold out of the stock market as people flew to safety and got concerned about what was going to happen next. What followed those people who sold at the bottom was a huge run as the economy opened up a lot more quickly than was originally forecasted. So if you would have had an advisor in your corner to perhaps even draw comparisons to the Spanish flu of 1918 and how that affected the global economy and what factors may make this time different, and highlight through proper planning that as long as this downturn only lasted a certain amount of time, that you could weather the storm, you could at least make more informed decisions. Additionally, asset allocation. So oftentimes when a client comes in with their statement, they might have an S&P 500 ETF and a Russell 3000 ETF, a global ETF within their portfolio. And when we go and run an analysis on that portfolio, between the 10% in each category that they have exposed to a stock, say like NVIDIA, which is essentially now a big part of any index, they may have as much as 30% of their portfolio in one individual stock because of what we call overlap. Additionally, a recent poll done by Fidelity found that retail investors keep an average of 20% of their portfolio in cash. That cash is not working for them, and ideally with proper planning, they'd have liquidity more handy to them, not in their investment account. Lastly, I think a tailored tax strategy. So by selecting the correct account type to open, contribute to, and withdraw from in retirement, and managing what type of investments are held in each of those different tax-qualified accounts, whether it be non-qualified or qualified, you can create a lot of alpha, just tax alpha, but just through proper planning. So if you think not having an advisor may be costing you, whether it be through additional taxes, over concentration into a security, or just, uninformed decision making, or allowing yourself to be convinced to follow the herd off the cliff, be sure to leave a comment below and let's have a conversation.